And who would have thought it's China? Ironic. Hey everybody, Walrus here from Walrus Street, bringing you your news and earnings for the week of April 12th, 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. There we go, pretty green week all around. We have the S&P 500 and the Dow Jones at record highs. The Nasdaq is getting pretty close, about 200 points off its high. Most of the struggles are coming in on the Russell 2000. In my market previews, I don't really cover the Russell 2000, but that's the small cap index. What this shows me is that a lot of the money that's going back into the markets right now, it's aggregating in the large caps and the mega caps, which are represented in the Dow Jones and the S&P 500, which is why the Nasdaq is lagging behind a little bit, and then the Russell 2000 is lagging behind most. So over the next couple weeks, we should start seeing that money trickle down into the Russell 2000. So if you're looking at your red small caps, just take a look at the Russell 2000 and you'll be able to see it's pretty much the entire index. Before we get started, one note, I've had a bunch of messages this week on Twitter, on Instagram, on Reddit, right here on YouTube about people asking me to cover their stock that's struggling right now because they want me to pump up the price. Guys, guess what? I'm not a shill. I'm not going to do that. All right, now that we've got that cleared up, let's take a look at the news. Just a reminder, I do publish my technical analysis every single week. This is my practice that I'm sharing with you guys. The link is going to be below the video. Everything's mostly the same with the addition of BlackBerry at the bottom following my DD on the company last week. First news story, China fines Alibaba $2.8 billion in landmark antitrust case. The penalty is the biggest move to date in China's campaign to tighten supervision of its internet Goliaths. By hitting the e-commerce titan Alibaba with a record $2.8 billion antitrust fine on Saturday, Chinese officials sent a message to the country's high-flying internet industry: we've got eyes on you. Alibaba was under some scrutiny because Jack Ma wanted to take Ant Group public and China opposed this entire thing. Jack Ma ended up going into hiding, which is a really nice way to say probably reconditioning, and he came out a couple months later after speaking out against the Chinese government saying everything was okay and he needed to do more to support the Chinese people. So China's market watchdog in December began investigating whether Alibaba had broken the country's anti-monopoly law by preventing merchants from selling their goods on other shopping platforms. The regulator said it concluded that Alibaba's exclusionary practices had hindered competition in online retail, affected innovation in the internet economy, and harmed consumers' interest. Basically, the largest monopoly in the world, the Chinese government, is fining Alibaba for monopolistic practices. It's like rain on your wedding day. It's like a free ride when you're already late. It's that good advice that you just didn't take. And who would have thought it's China? Ironic. Let's take a look and see what that did to Alibaba's stock price. Not a whole lot because the news was released on Saturday, so it was kind of at the end of trading. The stock price did drop by about 2% on Friday. After hours trading though, the sells are still above the price, so this probably isn't going to have too much of an impact on Alibaba whatsoever. And if you look into their financials, just their revenue in the last quarter was $34 billion. Their net income was $12.5 billion. So paying a fine of $2.8 billion is like 5% of their net income for the year. Yeah, it sucks, but it's not going to be like an ender for the company. Hopefully this just means they can move on from this antitrust situation. Everybody could put it behind them. When you look at those revenue figures and you see the market cap of Alibaba here at 600 billion, they're pulling in this much money per quarter in net income. They're trading 12 times earnings. This company is shamefully undervalued right now. If we zoom out, we could see it was once at a high of almost $100 higher, $319 a share. Now we're sitting at $223. So this company's been hurting during this entire investigation. It's done. It's over. Let's move on. Next story. Assets have tanked at two of the world's biggest short sellers, Jim Chanos, Kinnikos Associates, and Jim Carruthers Sophos Capital. Got much smaller in 2020, according to new regulatory filings. Kinnikos Associates and Sophos Capital both started 2020 with around $1 billion in regulatory assets. Chanos has lost lost more than 50%. Kinekos ended up $405 million, down from $932 million. Chanos' most notable loss was the Tesla short. Ooh, that one had to hurt. Even if you think Tesla's overvalued, don't short Tesla. That's just a recipe for disaster. Sophos had an even more dramatic decline than Kinekos. They started the year with 1.16 billion in regulatory assets under management, and they ended with only 258 million. Whoa, that's a big decline right there. That's impressive. I understand the necessity for shorting certain companies to kind of make them prove their worth. Shorting is a great tool for price discovery, but right now, when we're like 12 years into the largest bull market in history, this is probably not the time that you want to be running a short fund. Shorting individual companies has been profitable for certain people. Nikola was shorted back in September. This was the Nikola short, and this was from Hindenburg. It ended up leading to Trevor Milton's resignation as the CEO, which further drove the price down. Ride, Lordstown Motors, we actually just covered them, so they were just shorted by Hindenburg also, and it's driven the price down. EHang was one of the most incredible shorts that I've seen, and that just happened in February. The day before the Wolfpack short, EHang was trading as high as $130. The day after the short was released, it closed at 46. It lost almost 2/3 value in a 24-hour period. So shorting individual companies works, but running your whole fund as a short fund is giving people a hard time right now. I know a lot of my viewers hate shorters, so you might find that information cathartic. Yeah, you know, do with it what you will. Why don't you go ahead and pause the video, take a little moment to yourself if you need it. Next up, we talked about Coinbase's DPO last week. We talked about the valuation being about $100 billion. I wasn't sure if that valuation could be justified, but Coinbase announced its first quarter 2021 estimated results and full year outlook, and this is ahead of its DPO date. For the first quarter, they announced a total revenue of approximately $1.8 billion, adjusted EBITDA of approximately $1.1 billion, net income of approximately $730 to $800 million. For a single quarter, these numbers are much higher than everybody was expecting. Now that I've seen these figures, I'm fully expecting this stock to shoot up on its DPO. Personally, I'm probably going to be grabbing a few shares of Coinbase on DPO day, depending on how much money I have available. Though I think this is a valuable long-term hold, I'm probably just going to sell them off the same day. I cannot imagine that people are not enthralled with these sales figures, and the stock price is probably going to be shooting up on DPO day. If you're nervous about cryptocurrency and you're not really understanding how it's mainstream and you feel like you don't know which company to invest in, Riot, Mara, Coin, you don't know exactly what to do, one way to play the cryptocurrency situation as it is becoming more mainstream is to just get a crypto ETF. The largest one is BLOK, B-L-O-K. BLOK currently has 1.3 billion assets under management, which means it's a very liquid ETF, so you're not going to get stuck in an unfavorable position. You'll probably be able to trade in or out of it. The expense ratio is a little bit high for an ETF at 0.7%, but you get what you pay for. This is an actively managed ETF. It is an international ETF. We could look at the top 10 holdings here. Voyager, Galaxy, MicroStrategy, Marathon, Hut 8, Hive, Riot, PayPal, Argo, Canaan. All of the stocks that are in this ETF are companies that are at least fringe associated with blockchain, either semiconductor companies that are having increased sales from miners buying products, e-commerce companies, fintech companies, and then of course the actual miners themselves. The BLOK ETF actually has a phenomenal offering of companies, and the percent breakdowns make it very, very stable. Also, I'm expecting Coinbase to go into this ETF, obviously, as soon as it is publicly available to be traded. So again, if you're nervous about cryptocurrency and investing in it, and you want to kind of dip your toes in the water, but you don't want to pick the wrong company and get burned, SOS. Then just go ahead and get BLOK. Get this ETF. That way you have some exposure to the area, but it's relatively safe and it's not going to be a detriment to your portfolio if one company goes under. We had another company announce its upcoming IPO. Impossible Foods is prepping for a $10 billion IPO, which that's ridiculous. A $10 billion IPO would substantially dwarf the $4 billion the company was worth in private funding in 2020. So magically, in just 1 year, the company has gained $6 billion of value despite logging far fewer than $1 billion in sales. That's okay. This is totally normal. This is great. Personally, I think Impossible Foods have a better meat substitute than Beyond, so I do like this company more, but what I don't like is this valuation. The market cap is going to be $1 billion higher than Beyond Meat, despite the fact that Beyond Meat brought in almost 3 times as much revenue. Impossible Foods is a meat substitute. It's a niche product with a niche user base. No matter how good it is and how much you believe that this is the future of meats, right now a $10 billion market cap is not even close to justified for this company. I would even go out on a limb as saying this market cap is probably going to fall off after IPO. A couple of weeks after IPO, we're going to be below the IPO price. Next story, Biden announces limited gun control actions, saying gun violence epidemic has to stop. These were remarks by President Biden on Thursday after yet another shooting. Biden announced 6 actions, including asking the Department of Justice to issue a proposed rule to regulate the sale of so-called ghost guns within 30 days. Those firearms are assembled from kits of parts purchased online, don't have serial numbers, making them difficult to track. He later conceded that repealing immunity for gun manufacturers, which would require legislation, is the main priority and something he wished he could do now. Biden promised on the campaign trail to send such a bill to Congress on the first day of his administration, but he has yet to do so. Nothing related to assault rifles in these actions. That's always something that people are questioning. The president has fallen short on his promise on gun reform, and it hasn't been a priority for this administration. He focused on COVID-19 relief right out of the gate and is now focusing on his infrastructure proposal. During his campaign, Biden talked a lot about gun reform, but nothing's really been done yet. If you guys remember, we covered Smith & Wesson about a month ago, I believe. We looked at the associations between Smith & Wesson and news, like Biden winning the Electoral College, Biden's inauguration, and we saw how anything to do with Biden really drove down the price for Smith & Wesson. Surprise, surprise, it happened again. Thursday, this was just a little one though. We ended up closing at 18.28. Friday, we closed at 18.18. We only lost about 10 cents, but you can see the dip between the days here, and we can also see the volume drop off. So this isn't too substantial. While this didn't have a very profound effect on the share price, what I would expect here, along with everything else, this is going to drive gun sales. This is going to drive ammunition sales. Anytime there's talk in the news about firearm bans, firearm regulations, Americans tend to just buy more of them or buy more ammunition. In the short term, it's hard to say how to play this, but in the long term, we can probably expect more profitable quarters for Smith & Wesson. For these gun manufacturers, they're going to be reporting higher than normal revenue. Next story, we've been talking about commodities a little bit on this channel and how commodities are rising. Specifically, we've talked a lot about steel and how steel is close to all-time high prices. Well, another one that is at all-time high prices right now is lumber. Let me take a moment to differentiate this with timber. Timber is the tree that is felled, the price that's paid for that tree. Lumber is the milled timber, and lumber is already cut into the shapes that are needed for building, such as 2x4s, 2x6s. Lumber, as it stands right now, is at an all-time high price. This is going back as far as futures were traded for it. The reason that I bring this up, there was a incredibly interesting post on Reddit. This was on R Stocks. Lumber DD, CNBC Motley Fool's best lumber stocks unsurprisingly are the worst price performers or are unrelated to lumber. This was posted by Ding123456. Strongly recommend you guys go check this out. The lumber stocks that are being pushed have nothing to do with actual lumber. RYN, WYLL, Home Depot, and Lowe's is the best stocks to play the lumber market, but those are either retailers or timber sellers. They go on to say an actual lumber provider would be companies like WFG, CFPZF, IFSPF, and RFP. I'm not going to go through this whole post. You guys could read it if you want, but when I saw this, it caught my eye because, as you guys know on this channel, I've been really looking into Lennar, KB Home, playing options on them because I knew the earnings were going to be stellar. The earnings are stellar because home sales are up. Home sales are so popular right now because of low mortgage rates. These home builders are backlogged months, so they're buying lumber regardless of price, and this is driving up the price. Also, we have ports that are backed up for bringing the lumber into the country. International trade's still a little bit disrupted from COVID, and we have this kind of perfect storm situation where lumber is just in demand to a point where the manufacturers manufacturers can set whatever prices they want. This brings me to a company called Resolute Forest Products, RPF. They offer a range of forest products including market pulp, tissue, wood products, newsprint, specialty papers. Lumber's included in this. If we look at the chart for Resolute Forest Products, we can see that they actually bottomed out about $1.14 a share in April. And since then, we've been climbing and we're up to $12.16. If we go to the max chart, the all-time high was $30.54, and that was back in 2011. So this isn't like you're buying at the top. If we look at the financials right now, for the last couple of quarters, they have had incredible revenue gains, 3.55%, 15%, and this is after negatives before that. What happens with these quarters? How does this coincide? Let's just go back 6 months at the lumber chart. We could see the price starts rising around this period. So these earnings reports are going to be getting better and better and better. They're going to be making higher gross revenue, which is going to translate to higher revenue, everything else being the same. So what I did on this, I bought these $10 calls for November 19th expiry on RFP. I'm not planning on holding these calls anywhere near expiry because goods like lumber are cyclical. They peak and they fall off pretty quickly. So I'm expecting a peak sometime this summer, which is also the busiest time for home building, and then it's probably going to fall off thereafter. I just did November to give myself a little bit of a buffer, but I'm probably going to be closing out of these call positions around June, July, sometime in there, and my goal is to actually hit about 50% gains with this. I know that's crazy, but I actually opened this position up on Friday, and I'm already up almost 8% on my position. Now let's talk about an option that's failing for me. Schnitzer Steel reports second quarter fiscal 2021 financial results. This was my heat check option, and I think I missed. So everything in this earning report was stellar. Like, seriously, stellar. Net income of $46 million, more than triple the net income of $15 million in the first quarter of 2021, compared to net income of $5 million in the second quarter. Adjusted EBITDA of $71 million in the quarter, compared to adjusted EBITDA of $40 million in the first quarter of 2021, and $28 million in the second quarter. Everything's incredible. Schnitzer reported quarterly earnings of $1.51 per share, which beat the analyst consensus estimate of 99 cents by 52.5%. This is a 387% increase over earnings of 31 cents per share from the same period last year. The company reported quarterly sales of $600 million, which beat the analyst consensus estimate of $597 million by 0.5%. This is a 36.5% increase over the sales of $439.48 million in the same period last year. So what happened to the stock price after that was announced? We have since fallen significantly. Going into that, we were about $43 a share. Right now, we're at $39 a share. Safe to say my option is underwater, but just on my gut feeling, if you remember, I was talking about doing the April or the May option. I actually opened up the May option for this one. So I still have time and I have a little bit of hope. And in the words of Emperor Palpatine, hope is not a valid investment strategy. Execute Order 66. I don't actually know if he said the first part, but he definitely said the second part. And the first part sounds like something he would have said. So here's to hoping that I get something out of this. Let's take a look at the upcoming earnings for the week. This week kicks off the new earnings season in full. You can see right away we have a lot of the banking companies, JP Morgan Chase, Wells Fargo, Goldman Sachs, Bank of America, Citi, BlackRock, Morgan Stanley, Ally, PNC. Almost everything here is banking. Most notably, I'm going to be looking at Goldman Sachs and Morgan Stanley because I want to see if they actually say anything about the Bill Huang situation blowing up in everybody's faces. I just want to tune in on that. I'm not too interested in those earnings. I do want to take a closer look at Organigram. We have Afria and Organigram, both marijuana companies reporting. I covered Afria last time. I played an option on earnings. I killed it, but I'm a little less certain this time. Organigram, I do want to look at the chart for. Also, I want to take a look at KSPN and EHang. I've had a lot of requests to cover EHang on this channel, so let's go ahead and take a look at those two. Organigram is a Canadian-based company. They are a licensed medical marijuana producer of dried cannabis and cannabis oil. They've had revenue declines, but the revenue overall is pretty consistent. Not very high, but it's consistent. Net income, they are losing a lot of money. This is not a very financially healthy company. Market cap of about 700 million. This giant spike right here, this ran up around February 10th and then dropped around February 11th. This run up run-up was coinciding with legislation rumors for legalization of marijuana usage at a federal level, and then this big red day followed a trade halt that was imposed on the stock. And we ended up having another trade halt the next day. That kind of just killed all momentum on Organigram. And since then, we've just been kind of trading in this range from about 260 to about 450. So we're right near the kind of bottom half of the range at 305. I think Organigram has a chance to run up this week on any type of positivity on the earnings report. And this is because Afria is actually reporting the day before. If Afria posts good sales, then Organigram might actually run up a little bit harder. I'm not playing options on either of these. I'm staying away from them because I don't have much confidence in it, but it'll be interesting to see if they're tied together, if they're correlated. KSPN Holdings, formerly Transworld Entertainment, is a specialty retailer of entertainment products, including trends, videos, music, electronics, and related products in the United States. I don't really know much about this company, but they're an e-commerce software platform and they help people list products on e-commerce sites, and they also have their own sales outlets. One of them is FYE. If you've been to a mall, you've probably seen FYE stores. That's where you kind of go to get your CDs, your DVDs, that type of thing, any type of physical media that you want. Now, the company has a small market cap, 58.6 million. I mean, this is effectively a micro cap, but there's been kind of an interesting development over the last couple months with this company. Revenue has been gaining for the last couple of quarters, 31.5 up to 42, down to 38.9, but this is still an uptrend overall. Net income actually just turned positive for the first time last quarter at 2.55 million. If we multiply that out over an entire year, 10 million, their market cap is only about 5 times their net income for the year. That's not terrible. Now, we had a really big drop in price. We got up to a high of $63 a share. Then we ended up reaching around $47 a share again before just dropping off. If you're wondering why the share price is so high, they have very low float of only 1.3 million shares. Outstanding is only 2.43 million. So there's a lot of shares locked up. I wanted to take you through a chain of events. On February 10th, the company filed a shelf of up to $50 million in offerings. Now, this is effectively a shelf that's almost the same as their market cap. So this was a really big dilutionary move. People were not very happy about it. The company that was brought on to underwrite the shelf offering is Aegis Capital. Aegis Capital agreed to purchase on a firm commitment basis 416,600 common shares of the company at $32.50 a share. The underwriter is then going to be taking those shares and selling them to institutional investors. Keep in mind, this $32.50 is higher than the current share price. This was not for the full 50 million, and KSPN closed 13.5 million bought deal offering of their common stock on Thursday, March 18th. You can see when the bought deal offering started, the share price just tanked down to right around that $32 level, and we've actually since been dropping even more. This is the part that I love. There's no analysts covering KSPN, so Aegis Capital conveniently brought in their analyst to cover the company and gave a 12-month price target of $60 a share. So there's no analyst covering the company. The company that underwrites the sale at $32 a share talks up the company to institutional investors, then sends their analyst in and says, hey guys, we think this is going to hit $60 in the next 12 months. That's a fair value. They rated it as a buy as the first analyst to cover the company. And right now we're sitting at $24. So either Aegis is blowing smoke out their butt, or this company is going to kill its earnings this week, and it is actually significantly undervalued at $24 a share. I don't know enough about the company to play that game, but if you want to do a little more research, check into it yourself. This could be potentially a huge winner here if Aegis Capital is right. I kind of feel like they might be because they're sticking their neck out here. They were the sole underwriter on the position. They ended up writing the shares out at $32 a share, and that 416,000 ended up being about 25% of the shares outstanding at the time when the sale was made. So that's a lot of shares that aren't moving because the stock price is below the offering price. The last one I want to take a look at, we touched on it earlier today, is EHang. EHang makes automated flying taxis. This is our world. We're living in it. Automatic flying taxis deserve a company of their own too. Don't judge them, you taxi shamer. EHang ended up hitting a high price of almost $130 a share. Then the short report was let out, and the next day it dropped down to $46 a share. The company refuted it, but the refutation was bad. Since then, the share price has been dropping, and we're currently sitting at $30 $34 a share. So what's the story here? This is wolfpackresearch.com/research/ehung. This is another short company, kind of like Hindenburg. You can go check this link out. I'm not going to cover the entire short report, but we conclude that EH's relationship with its primary purported customer is a sham. Government records and credit reports show that EH's major customer, Shanghai Kunshang Intelligent Technology. We have gathered extensive evidence, including behind-the-scenes photographs, recorded phone calls, videos of on-site visits to their various facilities, as well as Kunshang's offices, that lead us to believe they signed sham sales contracts to benefit their investment stock prices in EH. They actually have covert video taken from inside the EH manufacturing facility that shows no people working during the week. Another notable thing in the short report was that ehung was translating into English differently from what they were reporting in Chinese. Now, ehung is a Chinese company based out of Guangzhou, China. They were translating the articles into English to embellish the certifications that their flying taxis were receiving. The next day, ehung responded to the short report by saying simply, "The short seller report contains numerous errors, unsubstantiated statements, and misinterpretations of information." This is the business equivalent of the company refuting the short report by saying, "Nuh-uh, no, that's not true." For some reason, this ended up bouncing the stock price all the way back up to $77 the next day before everybody realized, oh wait, no, they didn't actually say anything. The company dug the hole even deeper by giving more details about their relationship with Kunshang, and they were saying that Kunshang wasn't really invested, and the whole thing just kind of clouded the water even more. This was released on February 19th. This led to another 2-day drop of another 15% share price. So currently we're sitting down at $34 with like no trading volume. The company's financials aren't great. Their revenue is increasing, so that's good, but 10 million and the market cap is 2 billion almost. Their net income, they're still losing money. They're down 200,000. I'm thinking there's a pretty strong chance here that if ehung doesn't blow their earnings out of the water, the share price is going to tank even further. I'm not going to short the company this week. I'm not going to play that game. I opened up my lumber option. That was enough for me, but this is something that I want to follow to see if my gut feeling is right. My gut feeling is that ehung is going to tank after its earnings report. That's it for the news today. That's all I got for you guys. I hope you enjoyed the video. I am taking the week off this week from making a DD video. I'm trying to get into a healthier routine where I do 3 weeks of DD videos and then I take one off to give myself a little bit of a rest. If you remember, I covered BDSI, then I did SPAC week with 5 videos, and then I did BlackBerry. So I'm just going to chill this week, read some news, do some research, relax. I am recording my second interview this week with MTN News in Korea. So I'll be sharing that link with you guys probably next week sometime, so you guys could see me on the news again. Once again, MTN is kind of like the closest thing Korea has to a Bloomberg News. If you're new to investing and you do want to support the channel, please check out my Webull referral link below the video. If you sign up for an account using my referral link, deposit $100, you get some free stock, I get some free stock, everybody wins. Because I'm partnered with them, the free stock that I'll be getting is worth $30 or higher. And in this case, it is higher because Webull's currently running a promotion for the month of April where I get a stock worth $60 or higher. So that's cool. I appreciate it in advance. If you enjoyed the video, please like the video, subscribe to the channel. If you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. All right, everybody, thanks a lot. Have a great week. See you next time.